The rich and powerful won't talk about the bad side of tokenization, but Whitney Webb will. Through her work, she has shown that the next step in the development of the financial system, this tokenized world, isn't just about speed, efficiency, or openness. It has to do with power. Now, Larry Fink, who is working as chairman of the World Economic Forum, says that soon everything will be kept on a single digital ledger. There should be one database with a digital ID for each person, each transaction, and each object. This is not advice about money. Take a moment to think about that. Everything is written down in the same book. He's no longer just talking about bonds and stocks. He is saying that everything in the financial world and even the natural world will be watched, linked, and given a token. Whitney Webb has been warning about this very thing happening. Your personal digital ID will be tied to your financial information, your transactions, and even your ability to get to some assets. These changes are seen as the future of value by the World Economic Forum. However, it's really the greatest consolidation of power. And while most people are busy with other things, groups like the BIS, the IMF, and the WF are building the infrastructure for this uniform ledger right now, piece by piece. What's so crazy? The technology behind Ripple is sitting right in the middle of everything. These people don't just want to turn money into tokens. Their goal is to turn everything into a symbol, not just gold or real estate. The lakes, the air, the Amazon jungle, and even the carbon in the air. It is known as nature's economy. The goal is to turn things that were once seen as public or untouchable into a new type of financial object. A hectare of jungle could be turned into a digital token that can be bought and sold on the blockchain. Drones would be used for surveillance. Parts of ownership would be sold on markets around the world. To put it another way, they want to make money off of nature. It's not some crazy idea either. Natural asset firms have been looked at by BlackRock, Vanguard, and State Street for many years. Under the guise of sustainability, these structures give investors the right to protect, control, or use parts of the environment. Tokenization is the key to opening up new markets, Larry Fink has said many times. Putting everything together, though, makes it clear that this isn't just about making more money. It has to do with making new ways to control things. In the future, your carbon profile could affect your ability to get credit, travel, or even how much energy you use. Your digital ID is linked to that profile on a blockchain, which is part of this global ledger. That's the way this is going. Even so, this system will still need its own building. It will need base layers that can communicate with each other, keep costs low, and build trust among institutions for the billions of transactions that happen every day. Things like XRP, Ethereum, and a few other networks come in handy for this. With its focus on liquidity and fast settlement across borders, XRP is a great choice for the world of tokens. In the meantime, Ethereum is being tried by governments and central banks through pilots such as Project Dunbar, Project Helvetia, and Enbridge. These are all part of the BIS Innovation Hub. This means that when Larry Fink says everything will be tokenized and exist on a global ledger, he means a hybrid architecture, which is a mix of public and private blockchain systems. The Ethereum network could be used as a testing ground for digital securities, and Ripple's XRPL could be used for the secure settlement of tokenized cash, commodities, and stablecoins. These networks are not in competition. In this system of total digital merging, they make each other whole. Let's go further now. It's not a guess that BlackRock has already been testing tokenized funds through agreements with Securitize. Their tokenized money market fund is linked to RLUSD, Ripple's USD stablecoin infrastructure, so that institutions can settle their funds. That means we're not going to talk about the future. In the background, it's already live and quiet. Also, pay attention to the way Larry Fink talks. Tokenization, he says, will change markets and make entry more open to everyone. This democratization, on the other hand, really just means digitizing ownership so that AI-driven systems like BlackRock's Aladdin, which is one of the world's most powerful financial risk management systems, can track, trade, and control it. When that system is directly connected to tokenized assets on a universal ledger, it turns into a financial control network that can run itself. The scary thing about it is that most people won't even notice. The launch will be marketed as new ideas, environmental friendliness, and ease of use. Your bank app will let you know that carbon credits, tokenized real estate, and natural asset shares can now be added to your tokenized account. And at first glance, it will look like a chance. But behind the scenes, it's a complete change to how ownership works. Do you still remember that line from the World Economic Forum? You'll be happy with nothing you own? That makes sense now. The things that have been tokenized will not belong to you. You will only have digital access to them. They will still belong to the people who keep the ledger safe at the organization, but there is one good thing about this. There is chance for those who understand this change early on, largest chance ever, because this system needs funding providers, bridge assets, and infrastructure tokens that allow value to move around the world in order to work. Only a few assets were designed to do that, and XRP is one of them. Ripple's whole plan has been to work with states, payment providers, and central banks to make their services work together. They are also making deals in Asia, Africa, and the Middle East right now to make it possible for CBDCs to work together in new ways. That's why the Bank for International Settlements, BIS, has been talking about unified ledgers that bring together digital stocks, tokenized deposits, and Chinese new coins, CBs. This isn't science fiction after all. It's exactly what's being built right now. This unified ledger framework's plan has already been made public by the BIS, and Ripple fully supports its ideas. There should be instant settlement, full regulatory visibility, interoperability, and funding on demand. On the other hand, Ethereum is a place where programmable money and tokenized tools can be tested. In other words, Ripple and Ethereum are the building blocks for global tokenization. The BIS and the IMF are the architects. Larry Fink said, "We are just at the start of turning all assets into tokens." He's right. The only difference is that small buyers shouldn't be among the first ones to join. We should get involved after the system is set up, when everything is locked down, and after institutions have taken the gains. You might be able to get ahead of the mainstream wake-up call if you know where the money is going to move into XRP, tokenized systems that are linked to these ledgers. Time is very important right now because of this. We are living through the biggest transfer of wealth in human history, which is being sped up by BlackRock, the IMF, and the WEF. It's an easy question. What will you do? Will you stay on the outside or hold the assets that change the value in this new tokenized economy? That brings us back to the question, just what does Larry Fink mean when he talks about a new interconnected world ledger? Is it XRP? Is it Ethereum? Or is it both? A system that combines public and private blockchains into a single digital value framework? Because the answer will show where the real wealth will gather over the next 10 years. That is the exact question. Which is why, when you break down what Larry Fink, the BIS, and the IMF are saying, it sounds a lot like Ripple's approach. Ripple's on-demand liquidity, tokenized fiat, and cross-border settlement framework are all made so that value can be moved instantly between ledgers. It is known as a unified ledger by the BIS. It is known as the Internet of Value by Ripple. Not the same name, the same result. A way for money, assets, and identities to all be combined into a single customizable financial network. And look, someone is quietly putting everything together. People from the Federal Reserve, the European Central Bank, and the Bank of England are part of the IMF's working groups on digital monetary infrastructure. All of these have worked with Ripple's technology or looked into it. The BIS Innovation Hub has said in public that neutral bridge assets will be needed for CBDCs and tokenized accounts to be able to work together. The whole point of XRP was to do just that. This is the plan. To begin, turn standard assets into tokens, cash, bonds, and money market funds. Then, turn goods into tokens, carbon credits, gold, and oil. After that, combine those tokenized assets into a single liquidity layer that is run by AI. Yes, that is the book that Larry Fink keeps talking about. They also can't use slow or broken networks because it has to handle global load with almost no friction. Banks and other institutions are already testing Ripple's XRPL and Ethereum's EVM networks for this reason. When BlackRock used Securitize to test tokenized funds, guess what was linked in the background? A network linked to Ripple that offers instant settlement using a stablecoin backed by USD. And that's not just a chance test. The same company, Securitize, is letting Santander, KKR, and Hamilton Lane put private credit on the blockchain. Every test adds to the framework for the uniform ledger that is to come. At the same time, Ethereum is still being used as a testing ground for new regulations. The Monetary Authority of Singapore, the European Investment Bank, and the Swiss National Bank have all put out tests for tokenized assets or CBDC on EVM networks. As a result, central banks released liquidity on Ethereum, cross-border liquidity on XRPL, and institutional tokens through custodians with ties to BlackRock. It's a merger of multiple chains. That's exactly what the interoperable future of finance studies from the WEF talk about. Look at how quickly this is going. A few years ago, the term tokenization didn't come up very often in everyday banking. It's now the most important keyword in all official reports. Tokenization is what the BIS calls the next step in the growth of money. It is known as the bridge to the digital economy by the IMF. Larry Fink calls it the basis for making business more accessible to everyone. But behind those slick words, they're using computers to rebuild the world's financial order. Ripple has always had an edge because it is in line with compliance. The XRPL is not only quick, but it's also easy for regulators to understand, can grow, and is already built into payment networks. Then banks in Asia and the Middle East pick it to run new kinds of digital settlement. Ripple is already set up in places where CBDCs will flow, like the Monetary Authority of Singapore's passageways and the Saudi Arabian Monetary Authority's cross-border programs. On the other hand, Ethereum rules the customizable money layer. It deals with things like smart contracts, tokenized stocks, and decentralized finance. And when the BIS says it wants to link public and private systems, it most likely means that Ethereum-based coin infrastructure will connect to Ripple's liquidity network. The two could easily work together as the two engines of the unified ledger, with Ethereum taking care of programming and issuing tokens, and XRP taking care of real-time value transfer and settling. Let's look at what this means for each person. There will be a digital name for every tokenized asset. Every bank, user, and transaction will be checked. This isn't just about financial openness, it's also about being able to track things. The ledger can automatically apply rules, taxes, or even restrictions that have been programmed. That's what smart control is all about. It stops fraud and money laundering on the surface, but power is what it's really about. Whitney Webb wasn't just saying that tokenization will change markets. She was also saying that it will change what it means to own something. If everything is turned into a token and those tokens live on ledgers that are run by private institutions, then who owns what changes? Having an item in your digital wallet doesn't mean you own it. It just means you can use it. That's how the you'll own nothing strategy works in the tech world. The funny thing is that the rails that are being built for monitoring and control are also making an investment window that will only come around once every generation. Being a part of the infrastructure, coins, bridges, liquidity providers, and interoperability networks is like having early internet bandwidth. People didn't know that the cables and routers would be the most important parts of the web in the 1990s. The financial internet's cables and routers are now made up of XRP, XDC, HBR, and other related assets. This is where wealth around the world comes in. Boston Consulting Group says that by 2030, the market for all tokenized assets will be worth more than $16 trillion. If tokenized treasuries and repo markets become popular, JP Morgan says it could hit $30 trillion. A dollar of that value will have to go through a lot of different networks, countries, and currencies. There are also only a few tokens that can properly and quickly allow that movement to happen. That list starts with XRP at the top. Take a look at how this change fits in with the timing of the economy as a whole. The traditional markets have too much debt. Debt to GDP rates can't go on forever. Central banks want to find new places to get collateral. Tokenized real-world assets provide that collateral online right away in a way that can be checked and programmed. That's why the BIS has been pushing for new ways to use collateral. They can borrow more money against stocks, carbon credits, or even pieces of nature if they can turn them into tokens. The credit cycle starts over, but the rules aren't changed. And who does that equipment help? The networks that store the files. For every trade or transfer, you need settlement tokens, gas fees, and liquidity bridges. Thanks to Ripple's relationships with banks, XRP can be used as both the fuel and the settlement layer. It's not a guess, it's a technical must. Let's look at what Larry Fink really means when he talks about a world ledger that is linked to everything else. He's talking about a mesh network of blockchains where all digital currencies, security tokens, and market tokens can work with each other. The information is sent to AI systems that keep an eye on risk, compliance, and value all the time. It's great exposure for the institutions. It's always demand for investors who hold the rails of that system. This is why BlackRock added blockchain APIs to its Aladdin platform in a sneaky way. Over $21 trillion are under Aladdin's control. As soon as it connects to tokenized markets, it can quickly look at and rebalance portfolios of on-chain and off-chain assets. That level of openness is already built into Ripple's ledger through APIs. Ethereum sets the rules for tokens. When you put those together, You have Aladdin connected to the money grid of the future. In fact, FedNow, the new payment system from the Federal Reserve, was made to work with DLT. In other words, it can connect directly with tokenized payment networks when the time comes. The same is true for Singapore's UBIN Plus and the TIP system in the EU. They are all already set up to work with each other. The only thing that is missing is the world bridge. The BIS calls this the unified ledger. Liquidity has no limits in this system. A bank in Dubai could turn a shipment of oil into a token, put up security in Singapore, and settle the deal right away in dollars, yen, or digital euros. XRP's job is to connect these two types of money. It's not true that the token owns the object. It shows the exchange of value that makes the deal possible. That's why the on-demand liquidity plan from Ripple is so strong. It gets rid of the need for accounts that are already paid. Big groups like BlackRock, Citibank, the BIS, and the World Economic Forum are no longer just guessing about blockchain. A unified global banking infrastructure is being built around it. Through its CBDC platform, Ripple's technology is being added to the systems of central banks. This makes instant cross-border payment possible. Tokenization projects around the world, like digital bonds and multi-CBDC tests, can't work without Ethereum. These networks work together to create a new monetary order. They are the building blocks of a single global ledger that can handle trillions of dollars in real-time transactions. This change is not going to happen. It has already begun. The timetable, people don't realize how fast it's going. The BIS has already set 2027 as a major goal for CBDCs to be able to work with each other across borders. This is what the IMF's plan for digital currencies is all about. And Ripple's relationship pipeline for 2025-2027 is almost exactly the same. There's no chance about it. These dates are lined up, and once the unified ledger goes live, there will be no difference between crypto and banking. There will only be digital money. There is a token for every stock, bond, commodity, and cash that moves through the same interoperable web. Now, the only question is which tokens will be the main links that link everything together. We are already seeing relationships that lead to the answer. Ethereum works with BlackRock, JP Morgan, and the European Investment Bank, while Ripple works with Nations Trust, Tranglo, and SBI Holdings. Every group that works together is like a node in the world record network. In time, these nodes will join together. Value will be able to move around just like data does now when they do. Here's the strange thing. They are now building the rails with crypto, which they used to fight. Larry Fink used to say that Bitcoin was a scam, but now he says that tokenization is the next big thing in markets. The BIS used to be skeptical of stablecoins, but now they use them in settling tests. The IMF was once wary of CBDCs, but now they are writing their rules. Now is the end of the fight phase. Now we are in the adoption phase. What will happen next? There will be more full-scale tokenization pilots in more big economies over the next 6 to 24 months. Money markets, fund shares, and treasury bills will all be linked together. Central banks will connect CBDCs in different countries. It will be private managers who connect traditional finance to tokenized form. With each new link, the base settlement layers have to deal with more liquidity demand. To issue, use Ethereum, and to send, use XRP. We are seeing the rebirth of financial history happen right now. The world's wealth used to be recorded on paper and in separate databases. Now, it is moving to a single programmable ledger with no borders. And right now, the networks that hold that much value are being set up to become the digital roads of the new financial world. What's happening with Ripple, XRP, and the world's banking system right now isn't just a single tech trend. It's the last step in a long process of changing money that began decades ago. The change from paper money to digital money, from having different ledgers to having a single network. What's even more interesting is that the groups that built the old system are now leading the way to fix it. Take a look. It is clear that central banks are working with private blockchain companies. The IMF, BIS, and the World Bank are all putting out detailed rules on synchronized settlements, real-world collateral, and tokenized assets. Every single one of those reports talks in a way that Ripple has been using for almost 10 years. Exchange of value right away, liquidity links, and interoperability. They aren't making Ripple copies. They're following Ripple's plan. That's what most people miss. The whole point of XRP from the start was to solve a problem that the banking world couldn't handle on its own. Liquidity in pieces. A lot of money is stuck in correspondent banking systems that haven't moved since the 1970s. sitting idle across borders. Through Ripple's technology, these institutions can use a bridge asset that moves quickly and can be seen by all regulators. And the adoption phase is going quickly now that the legal cloud over XRP is gone. Watch as partnerships form in the background. The Middle East, Africa, and Southeast Asia are all becoming major payment routes. Ripple is buying important infrastructure companies that take care of everything, from storage to tokenization. These moves aren't made at chance. They're like chess pieces that are being moved around to control the next wave of financial systems. And if you look further, you'll see that the real investors, the ones with patience and vision, are loading up before the liquidity flip is complete, while everyone else is focused on short-term instability. What's even more telling is this. A study from the World Bank called The Interlinked Ledger Economy was just released. Their goal? Every type of financial instrument like stocks, bonds, currencies, and even carbon credits will be represented by tokenized records on ledgers that can be used by other systems. It all starts to make sense when you look at how Ripple works with BIS, how the IMF includes XRP-related frameworks in its pilot papers, and how the World Economic Forum has tokenization working groups. The idea of a uniform ledger is no longer just an idea. Right now it's being built, tested, and brought into order. At this point, blockchain, AI, and finance all come together to form a single world system of programmable money. That's what Whitney Webb told them not to do. She wasn't talking about guessing about crypto. Control was what she meant. If value is stored entirely on digital lines, then the person who controls access, data, and interoperability will have full control over everything. In a strange way, the only way to keep your freedom and chances in that system is to learn about the assets and technologies that make it work before they become common. Ripple is where all of those things meet. The model is being used by states not because they love crypto. This is because Ripple provides a way to move money quickly, safely, and openly that is in line with regulations. That's exactly what the IMF and BIS want to add to the single record. Every new network that an XRP is added makes it more useful. More passageways mean more money moving through them. The real desire for the bridge asset goes up as liquidity goes up. You are seeing the beginning of a time of revaluation. Not just the price of XRP, but also what it does. A change from investing to building things. Settlement levels like XRP will be very important when tokenized treasuries, real estate, and goods start moving through these systems. The public then finally sees what has been building up for a while. Don't just see this as a Ripple story, a court case, or a price chart. This is about who gets to decide how money will work in the future. Power centers are racing to take control of it.